You wake up one morning, and everything is gone. The account you checked before bed shows a balance of 0. The brokerage app that once held years of careful decisions now displays nothing but error messages. Your home, your car, your emergency fund, all of it wiped out overnight. A market crash. A fraud. A single bad decision that snowballed beyond repair. You sit on the edge of your bed and feel the weight of starting over. The fear is real. The shame is louder. And in that moment, the question that has haunted every serious investor finally arrives with teeth. If you lost everything tomorrow, what would you actually do? Most people would panic. They would chase the next hot stock, the next meme, the next promise that this time will be different. But Warren Buffett has answered this question before. Not in theory, but in the way he has lived and invested for more than 7 decades. He has said, in different words across different decades, that if he had to start from nothing again, he would not chase complexity. He would not diversify into 50 different ideas. He would not try to be clever. He would return to the same 3 principles that have compounded his wealth for a lifetime. This is not a motivational story. This is not theory. This is the exact blueprint Buffett has followed when the stakes were highest. The 3 stocks he would buy with his first real capital if he had to rebuild from 0. You are about to see exactly what those 3 stocks are. Why he would choose them? How you can apply the same thinking even if you are not starting from nothing. The first stock, Coca-Cola. If Warren Buffett lost everything tomorrow, the first stock he would buy is Coca-Cola. It's not because it is flashy, not because it promises explosive growth, but because it is the single clearest example of what he has always looked for. A business so simple that a child can understand it, yet so powerful that it has survived wars, recessions, and cultural shifts for more than a century. You have to picture the scene. It is 1988. Buffett has already built Berkshire Hathaway into something substantial. But he is about to make one of the largest single investments of his career up to that point. He buys 6.3% of Coca-Cola for roughly $1 billion. At the time, many people thought it was overpriced. The stock had run up. The market was expensive. Buffett did not care. He saw something different. He saw a company that owned the most recognized brand on the planet. He saw a product that costs almost nothing to produce and sold for a high margin in every country on earth. He saw a business that did not need to invent new things every year to stay relevant. People already wanted it. They'd wanted it for generations. If he lost everything tomorrow, Buffett would buy Coca-Cola again. The same reason he bought it in 1988. It is a machine that prints money in good times and bad. When economies collapse, people still reach for a Coke. When they feel rich, they still reach for a Coke. The brand is so strong that it barely needs advertising anymore. It simply exists in the background of human life. The numbers tell the story better than any story could. Since Buffett bought Coca-Cola, the company has returned more than 1,000%, including dividends. But the real power is not the return. The real power is the predictability. Coca-Cola has raised its dividend for 62 consecutive years. It has survived the Great Depression, World War II, the 1970s, inflation, the 2008 financial crisis, and the COVID-19 pandemic. If you lost everything tomorrow, you would not need to predict the next technology trend. You would not need to understand semiconductors or artificial intelligence. You would simply need to own a piece of the most reliable cash flow machine in consumer history. Buffett has said that his favorite holding period is forever. Coca-Cola is the stock that makes that statement feel less like a slogan, more like a survival strategy. And the 3 stocks he would buy with his first real capital, if he had to rebuild from 0? This one surprises people. For years, Buffett avoided technology stocks. He famously said he did not understand them well enough to invest. Then, in 2016, he began buying Apple. By 2023, it had become Berkshire Hathaway's largest position. Why would he buy it again if he lost everything? Because Apple is no longer just a technology company. It has become one of the greatest consumer brands in history, right alongside Coca-Cola. More importantly, it has built something Buffett has always prized above almost everything else. It's an economic moat so wide that it is nearly impossible to cross. Think about what happens when you lose everything. You no longer have the luxury of chasing high-growth stories that might work or might fail. You need a business that can compound capital for decades, with almost no risk of permanent capital loss. Apple has that quality. Owns the most valuable ecosystem in consumer technology. Once someone buys an iPhone, they are likely to buy an Apple Watch, AirPods, a MacBook, and subscribe to Apple Music or iCloud. The switching costs are enormous. Brand loyalty is almost religious. But the real reason Buffett would buy Apple again is the cash flow. Apple generates more than $100 billion in free cash flow every year. That is more cash than most countries produce in tax revenue. And unlike many technology companies, Apple returns a massive amount of that cash to shareholders. Through dividends and buybacks. If you lost everything tomorrow, you would want to own a business that can survive the next 10 recessions. Without needing to raise money or cut its dividend, Apple has that ability. Has more than $160 billion in cash and marketable securities on its balance sheet. It can weather almost anything. Buffett has called Apple a consumer staple, disguised as a technology company. That is the highest compliment he can give. It means the business has the predictability of Coca-Cola, combined with the growth of a technology leader. The lesson is not that you should rush out and buy Apple today. The lesson is that when everything is gone, you do not reach for the most exciting story. You reach for the business with the strongest moat and the most reliable cash flow. Apple has both. The third stock, Berkshire Hathaway. The third stock is different from the first two. If Warren Buffett lost everything tomorrow, the third position he would build is not a single company. It would be Berkshire Hathaway itself. Or, more accurately, he would rebuild the insurance float machine that made Berkshire possible. This is the part most people miss. Buffett's real genius was never just picking great stocks. It was creating a structure that allowed him to buy great stocks with other people's money. That structure is the insurance business. When you own an insurance company, you collect premiums up front and pay claims later. That gap, the float, gives you billions of dollars to invest before you ever have to return the money. Berkshire Hathaway currently has more than $170 billion in float. Buffett has used that money to buy Coca-Cola, Apple, and dozens of other businesses without ever having to sell shares or take on debt. If he lost everything tomorrow, Buffett would immediately look for a way to rebuild that float. He would buy or start an insurance operation, even a small one, because it gives him leverage that no other structure provides. For most people, this translates into owning Berkshire Hathaway itself. Berkshire is the only publicly traded company that gives you exposure to Buffett's insurance float, his collection of operating businesses, and his stock portfolio all in one. But the deeper principle is this: when you have nothing, you do not just want great investments. You want a system that compounds capital automatically while you sleep. Insurance gives Buffett that system. It is the reason he could turn a failing textile mill into a $900 billion conglomerate. If you lost everything tomorrow, the third thing you would build is not another stock position. It would be a mechanism that lets your capital work harder than any single stock ever could. Why these three and not others? You might be wondering why these three stocks and not others Buffett has owned. Why not American Express? Why not Moody's? Why not Bank of America? The answer lies in the extreme scenario. When you lose everything, the rules change. You no longer have time to recover from mistakes. You need businesses that can survive the worst possible conditions with the highest probability of success. Coca-Cola gives you timeless consumer demand. Apple gives you a modern moat with extraordinary cash generation. Berkshire or insurance float gives you the ability to compound capital at scale using other people's money. These three together create a complete system. 1. Business that has survived every economic condition for over 100 years. One business that dominates the current economy with almost no competition. One structure that allows you to deploy capital aggressively without taking on personal risk. Buffett has never said these are the only three stocks he would own. But in the hypothetical of losing everything, these are the three that best represent the principles he has repeated for decades. Buy wonderful companies at fair prices. Hold them forever, and use leverage only when it comes from a durable source like insurance float. The psychology behind the choices, there is something deeper happening here than just stock selection. When most people lose everything, their first instinct is to chase. They want the stock that can make it all back quickly. They want the next Nvidia, or the next Tesla. That instinct is understandable. It is also usually fatal. Buffett's approach is the opposite. You would choose businesses that feel almost boring. Coca-Cola does not excite people in 2026 the way it did in 1988. Apple is no longer the revolutionary company it was in 2007. Berkshire Hathaway moves slowly by design. The boredom is the point. You have nothing left. Excitement is a luxury you cannot afford. What you need is predictability. You need businesses that will still be here in 30 years, still generating cash, still raising dividends, still protected by moats that competitors cannot easily cross. The 3 stocks Buffett would buy are not the 3 that would make him rich the fastest. They are the 3 that would make it almost impossible for him to stay poor. That is the real lesson. What this means for you, you are probably not going to lose everything tomorrow. But the exercise is still valuable. It forces you to ask a different question than most investors ever ask. What would I own if I could never buy another stock again? The answer usually leads you to the same 3 characteristics. 1. Timeless demand, a product or service people will still need in 30 years. 2. Economic moat, something that protects the business from competition. 3. Cash flow durability, the ability to generate more cash than the business needs to survive. Coca-Cola, Apple, and Berkshire Hathaway are simply the clearest current examples of these 3 characteristics in one portfolio. You do not need to own these exact 3 stocks. But you should own businesses that share the same qualities. When you strip away the noise of quarterly earnings and market sentiment, the best investments almost always look like this. The final truth. Warren Buffett has said that the best investment you can make is in yourself. But once you have done that, the next best investment is in wonderful businesses at fair prices. If he lost everything tomorrow, he would not try to outsmart the market. He would not try to predict the next decade of technology. He would simply return to the same 3 ideas that have worked for him since he was a teenager, reading The Intelligent Investor in a Library in Omaha, Coca-Cola for its timeless brand, Apple for its modern moat in cash flow, Berkshire Hathaway for the ability to compound capital at scale. These 3 stocks would not make him the richest man in the world again overnight. But they would give him something far more valuable than speed. It would give him time. And in the end, that is what separates those who recover from those who never do. You do not need to wait until you lose everything to start thinking this way. The question is available to you right now. If you could only own 3 stocks for the rest of your life, which ones would you choose? The answer might be closer to Buffett's than you think.